Okay, everybody, but welcome to 2026 version. And yeah, if you've been to my class before, I talk about loans. I also talk about what is happening really with our older homeowner demographic. Staying alive in 26 is about generating business for yourself through some listings with older homeowners, as well as learning about the loans and really just getting a snapshot of what we see from our industry perspective on retired homeowners. I typically see about 1 to 3 homeowners a week when they're calling in and they're looking for information on loans. So I'm going to share with you what I have learned and also what I think um, challenges are facing them. So let's hop into the program. Um, I don't think that's any secret. Cash flow and retirement probably is not what a lot of people hoped it would be. People have had their house for a long time. Maybe they got Social Security, maybe a little bit of pension income coming in, and that's just it just doesn't cut it all the time. And especially with expenses of maintaining homes, anything else that you need to do retired, it's rough to keep things running and keep it at a comfortable pace. So I get called out because people are saying, "Hey, we want cash. I want to get some cash out of this house." Their family members call, "Hey, can you help out my parents and see if they can get some money out of the house and be able to stay in the house?" And so the question is, can I? And I'm going to tell you, it's tough. It's tougher to get refinances right now. Cash out refinances are a tough gig right now. If you're looking for regular financing when no rates are higher, it's tough to refinance when you're retired from a low rate to a high rate and take that payment on. I haven't done a regular loan because I've done all loans for about 20 years. I haven't done a regular refinance, like a 30-year fixed for a retired homeowner since 2022. And then even the reverse side, we'll talk about how that's not as, I wouldn't say lucrative, but how the cash amounts have dropped out on those. And then, of course, if an older homeowner needs access to cash and they can't get it through loans, who's selling and how is that happening? So that's what we want to talk about today. Is they're experiencing, you know, shortage of cash flow. On the other side, they're saying, "Hey, it's not as easy to get loans as it used to be." Since from a perspective of people are selling homes, older homeowners are selling homes. And how would we know which older homeowner might be interested in selling? This is kind of a factual thing here. This isn't like I'm trying to predict who's going to sell just based on their age. When I go and visit homeowners, I look and see what's going on with their house that might have caused me to be out there. Why would I be out visiting someone? And what could we see? So I can almost predict one of these is going to be happening when I go out to see a retired homeowner that's looking to get some money out of their house. Um, House needs maintenance. They may have a tax late. They may be in some type of default. Um, they may, well, a lot of them are seeing problems with insurance, having to get new insurance, seeing their premiums go up. Maybe they need fair plans. Um, we have quite a bit of credit card debt right now. So, um, things got expensive. We know income didn't keep up for our retired homeowners. About half of the retired homeowners right now that have credit card debt, that credit card debt is just from general expenses like food, things like that, gas. So using credit cards more and more to help counteract inflation. And so that's a tough thing. So at the end of the day, what I have here is a list of things that we could try to figure out how to find these people just based on signs that they might need to sell their home. And so I'll go a little bit into this later on how we can find these signs. So therefore, it might lead us to somebody that's looking to sell a home. All right. So we'll get into that a little bit. So goals for refinancing. I don't think this is any surprise. Um, Cash flow gets restrained when you're retired, and you got to keep houses up in a more expensive market, right? Fixing things, roof leaks, water heaters, all of these things become much more expensive. And so they're looking sometimes not even to say, "Hey, I want to get cash out because I want to travel or I want to do all these great things." Maybe I used to see that more, I'd say like 5 or 6 years ago in the reverse industry. Nowadays, I'm seeing people are just more saying, man, I really need to get this house fixed up. I don't care about spending money on other things. I need to put money back into my house, or even basically pay off credit card debt is what I'm seeing a lot of right now. So the goals for refinancing have changed a little bit, in my opinion, from just having extra cash to be able to enjoy it to really needing to pay your credit card bills and keep the house maintained. Um, so when I go out there and they say, "Hey, Ryan, I have a lot of equity. Maybe I'm 70 years old and my house is worth $900,000 or $1 million. I owe 500,000 on $1 million home. I should be able to get a reverse pretty easily, right?" And that's not necessarily the case. First of all, let's just talk about a regular loan. If you've owned your home for 10 or 20 years, or maybe even 7 or 8 years, you have a low interest rate loan, most likely. So refinancing with a regular loan to get cash out, like I said, I haven't done one of those in 4 years. Because by the time we do the math for the client, assuming they can even qualify for the loan, when they see what the new payment would be, they're like, ouch, I can't do that. I'm trying to figure out how to save money every month. And that goes for like home equity lines as well. To try to get a home equity line to have your mortgage payment on your first, plus you got a home equity line, you're putting yourself further in debt there that you have to make payments on. The regular loans just aren't getting it. How about reverse mortgages? Well, what happens is when interest rates go up, although you don't have to make a payment on a reverse mortgage, so you might think, who cares about interest rates when it comes to reverse mortgages? Well, we care in our industry because we'll review a reverse mortgage in a minute. But basically, if you're getting a reverse mortgage and you don't have to make a monthly mortgage payment, that simply means that we're adding the interest on to the balance. Instead of you paying us the interest every month like a regular loan, we're adding the interest onto the balance when you decide not to make a payment. So that reverse mortgage goes up each month. Well, if interest rates are higher and money is more expensive, we have to add more onto that balance. Well, our industry doesn't want houses to be upside down because that's a tremendous burden for our industry. And so when interest rates are higher, what we do to try to slow down how quickly balance goes up is just start by lending less money. So we literally lower our loan amounts as interest rates are higher. So that way there's more room to have interest add on to the loan. All that goes to say is that you're not getting as much money as you used to. And as a matter of fact, let's say you have $1 million home and you're 70 years old. You might be getting on the order of about $100,000 to $150,000 less on a reverse mortgage. That's a lot of money. That's a lot less money. So they're not working like they used to. As a matter of fact, maybe only 35% of the people, maybe 40% of the people that will inquire about a reverse mortgage will end up getting one because the numbers just don't work as well. So what you have then is like 60% or 65% of people who raised their hand and said, yeah, I kind of need cash out of this house, or I need to get rid of a mortgage payment. We say, sorry, we can't help you. They're saying, well, my problem doesn't go away. So will they sell their home? Well, absolutely. Okay. The average age of a home seller in 2025 was about 63 to 64 years old. That's right. That's the highest ever recorded, by the way. Almost 60% of the homes sold were by somebody, you guessed it, 61 years or older. So this just means that, well, first of all, we know that boomers own a lot of real estate, but also that they are selling these homes as well. And by and large, the largest demographic of home sellers. So kind of, you probably already knew that a little bit. Maybe you've seen this data before. This data comes from the National Association of Realtors. You can buy this report as a realtor for about $20. It's well worth it. Um, anyway, going back to my story. So if you see a lot of homes out there are by somebody that's older or they're retired or something's going on, well, there you go. Now it just backed up what you might be seeing already yourself as a realtor. Well, we're going to spend a minute on reverse mortgages, of course, here today. So let's go back to the reverse mortgage for a minute, Ryan. So you can still get the reverse mortgage. Yes, you can. It's just that you might not get as much money, or you need to have more equity to get the amount of money that maybe you wanted. So when I sit down with clients and I say, look, here's what you can borrow on a reverse mortgage. How I determine that amount, I'll tell you in the next couple of slides. But I already kind of mentioned it has to do with interest rates, right? So when I let a client know this is how much you can get, and maybe it's not enough to pay off their current mortgage, right? Maybe they owe 400,000 on the house and I can only get them 400. That's probably really not going to work. Maybe they owe 420 and I can only get them 400. I can't pay off their current mortgage, so that doesn't work. What if I can get them 420 and they owe 420? They might say, "Oh, good, I get rid of my mortgage payment." And I say, I get it. Get rid of your mortgage payment is helpful, but I really want you to be liquid. I really want you to have money in the bank and no payment on your loan. Because as we know, expenses ratchet up. We get hit with bills constantly. We're like, it's $1,000, it's $1,500, it's $500. And to be really, I think, set up or more successful in retirement, having no mortgage payment and then being able to get some cash out and put it in the bank, I think is very important. So a lot of times I'll tell a homeowner, hey, even though I can get rid of your mortgage payment, I can get you a loan big enough to get rid of your mortgage payment. I want you to think about selling and getting to a lower price property. We need you to get more money in the bank. And so I'm having a lot of conversations about homeowners selling their homes. Okay. And of course, finding the replacement property, there's some discussion there. Am I going to have to get another loan to buy this lower price property? Can I get a reverse mortgage on this lower price property? And the answer is yes. Yeah, we're going to talk about a reverse purchase loan because that's very helpful when you're downsizing to a lower priced home to still be able to not have the mortgage payment. But also, since you're going to a lower priced home, we can get some cash out of the house and put it in the bank along the way. And I'll go through a slide on this. You don't have to try to do any math right now. This slide really actually is not even relevant right now. It was relevant, I think 6 or 7 months ago when rates were coming back down and they were looking good, because what this shows is how much I'm getting somebody maybe 5 years ago compared to today. But the today example is actually a little bit too high, okay, because rates have gone back up. But basically back in 2021, a 75-year-old, if they had a house worth 950, they could get about 58% of the value of their house on a reverse mortgage. So they could get a loan for almost 560,000 bucks. That's pretty good. Let's say they owed 425 on that house. I could pay off their mortgage and give them 134,000 cash because rates were lower. I was lending more money. That wasn't too bad. I have a lot of people that would love to get that same loan right now, but we don't have that loan anymore because rates are higher. So let's say it's 4 or 5 years later here, the house value has gone up. But let's say that the same 75-year-old hasn't aged, but their value's gone up. I'm trying to keep this apples to apples for loan amount. This client is getting much less. As a matter of fact, 500,000 is even too high as of rates today. A 75-year-old on $1,050,000 house is probably getting somewhere in the fours, maybe about 450. So it's about 110 to 120,000 less than a few years ago. Really, at the end of the day, we're just giving less money, and it makes it a little tougher to pay off mortgages and have some cash left over. Okay. I'm going to talk about finding these homeowners a little bit later on in class. I'm really going to try to get through a lot of the reverse mortgage info quickly because I want to talk about how we can use some software that we're going to give you logins for that will help us try to determine which homeowners might need to sell their homes. Okay, so we're going to get to that as long as I can get through this other material fairly quickly because I think it's important for you to know if there's a house in your neighborhood that has a high probability of selling according to data that we have, that you might want to know who that person is. Good chance that person is older. Okay. Good chance that person has some of the criteria that we've been hearing about. So how do you get to those people? How do you get people to refer those people to you? How do you know what questions to ask? We're going to go through all of that coming up. First, let's go through our reverse mortgage refresher. Okay. So if you know how a regular loan works, you know a lot about a reverse mortgage already. I know. Maybe you're like, really, Ryan? Are you sure? Yeah, because let's go through the similarities on a traditional loan and a reverse mortgage. Number one, we are simply lending money to you and we're putting a mortgage on your title. That's it. Reverse mortgage is simply a loan. We're not doing anything like we're taking over, do anything with the house. We're just like a regular loan. We're loaning money and we're putting a mortgage on the house so we can get paid back. Same thing there. With a regular loan, Obviously, you can hold the title in your trust. You can hold the title how you want to hold it. Same thing with us. Um, Regular loans, you're going to pay them back one day. We're going to get paid back one day. Here's the big difference. A traditional loan, let's say I give you a $400,000 traditional loan, 30-year fixed, and you get a statement every month that shows what the payment's going to be. And you need to send that payment in. Why? Because the lender wants to get paid back a little bit each month. They want to get some of the money back they've loaned plus the interest they've charged. And so you make a payment every single month. Your balance goes down a little bit every single month for 360 months. Well, if I lend you money on a reverse mortgage, you're going to get a statement. Let's say the same thing. Let's say I've loaned you, $400,000 on a reverse mortgage. It's going to show you how much you borrowed. It's going to show you what the interest cost is for the month, a lot like a regular loan would. Here's the difference. Our loan is not going to really say the payment is due on the 15th. We're just simply showing what the interest is going to be for the month. And you will know if you don't send that in, you could, but if you don't send that in, let's say the interest is $4,000 on this loan, and you're like, Ryan, I'm not sending it in to you. I don't want to. That's why I got this loan. I say, no problem. You owe me 400 this month. You're not sending in the 4,000 interest. Next month, your balance will increase to 404. So the only thing that we've really done different with the reverse than a traditional is we give the client an opportunity when they get their statement to say, I'm not going to make a payment. I don't want to, or I'm going to skip a payment, and nothing will happen to them. We don't care. We simply add that interest on, because a regular loan, you would have paid the interest that month. If you're not paying us the interest, we need to get paid that interest, but we'll just add it to how much you owe and get paid later. So a reverse mortgage is a series of mortgage statements every month that's letting someone know how much they owe, and then saying, if you don't send in money this month, we're just going to get paid back later. We will just defer that interest until a later point in time. That's the big difference. A regular lender wants to get paid back a little bit each month. We're going to wait to get paid back all of the interest at a later point in time. So if the client just does that, let's say the client just doesn't make a payment ever, they don't have to. They're going to owe a lot more, because each month, instead of making that payment, we're adding it on to how much they owe. But that's per their prerogative if they don't want to make a payment. And they can just do that as long as they live, basically. So we're never saying to them, hey, you're owing too much, you've lived too long, house values have dropped. None of that happens. They're there for their lifetime, right? And so along the way, I don't know what they've done. Maybe they decided to make payments 6 months and take 6 months off. I don't know. That means they would owe a different amount than the person that never made a payment. Maybe some people just get this loan and they only make a half a payment every month because they want to have extra money, but they don't want their balance to go up that quickly. Our industry we literally don't care how people run their loan. We're just going to keep track of whatever interest we weren't paid and ask for it to be paid back when the client has either decided to sell the house or refinance, or they've passed away. We're going to say, here's how much we're owed. Okay. So there you go. A reverse mortgage is based like a traditional loan, with the client being able to say, I don't want to make a payment. Just add it to how much I owe you. Okay. That interest cost, right? Now, some people will say, okay, Ryan, that's very interesting. Sure. But I just don't have any desire to defer interest and owe more later. So that's cool. Loan is not that interesting to me. Maybe until they go and try to get a regular loan. And so I would say 70 or 80% of the people getting reverse mortgages have probably figured out that qualifying for a regular loan or the higher payment associated with that is not going to work. So they're like, oh, man, I guess I am interested in your loan, Ryan, because they told me my debt ratios don't work for a regular loan. They told me that for a HELOC, my debt ratios don't work. And so, what are your debt ratios? And I'm like, I don't have a debt ratio. So we are designed to qualify just totally different than a regular loan, because we're geared towards people that are retired. So we're saying, look, we're not going to expect you to make a mortgage payment. So that's one big deal right there we're going to knock off and not worry about you having money for. Second thing is, we're not worried about your debt ratio situation. What do we care about? We care about that you have enough money basically to pay your tax, insurance, and to have discretionary income to just eat and survive. So I'm going to tell you the average income I see on reverse mortgages that qualify for reverse mortgages are anywhere between 1,200 to 1,800 bucks a month. Literally, that's it. And even if you're getting a three, four, $500,000 loan, it doesn't change by the amount of the loan. It changes by what the tax insurance cost is. And basically that's the big deal. So it's just a totally different way to get a loan. And it works. It really works. So that way you can still buy homes, you can still refinance homes in retirement when your income is just not going to do a lot of supporting for you. Okay. So that's why a lot of people do reverse mortgages. It's not because they're like, hey, I love that loan, Ryan. That loan's great. I've been waiting so long to get one of these loans. Matter of fact, when I was 30 years old and I bought my house, I always wanted a reverse mortgage. I've never heard that before in my life. But I've heard a lot of people say, okay, I can get your loan. I can qualify for it. If I'm interested in making a payment like a regular loan, I can do that. If I want to skip payments, my balance will go up. I can do that. I say yes. And they say, okay, this might be the tool that I need to be able to be a homeowner in retirement. Um, but then we come full circle to where sometimes our loan amounts just aren't going to be enough to satisfy what somebody needs. And so because of the interest rate thing, right? And let's talk about that. Let's talk about qualifying to get a reverse mortgage. And also the amount of cash you get. Because I'm having a lot of conversations with people that think they're going to stay in their home that I ultimately tell them, you're going to sell your home. Like it's my choice or something, right? Well, I mean, you start running out of options. How about that? So that way you get to the point where you're like, I guess I didn't want to sell my home. I'm going to sell my home. And this is why. Number one, when we qualify someone either to buy a house or refinance a house, when somebody wants a reverse mortgage, here's the formula. And I really don't care whether you're getting a reverse mortgage in Canada, I mean, Australia, Japan, they're all over the place. It's the same three things. How old are you? What are interest rates? And what is the house worth? That's it. And you notice I didn't say what your credit score, your income, because no, I didn't say that. To determine loan amount, I need to know your age, interest rates, and value. So interest rates we talked about a little bit, why that's important, right? Because if the interest rates are higher and you don't make a payment, right? You don't have to make a payment. I have to be worried about more interest adding on. So when interest rates are higher, I'm going to start you out with a lower loan amount, less money. How about age? Well, let's talk about age. If I tell you I'm going to give you a loan where you don't have to make a payment the rest of your life and you're 55 years old, which is what you could get a reverse mortgage at right now, and so that means you're going to live at least another 25 years according to life expectancy tables. You're like, dude, you're going to miss payments for 25 years. I'm thinking, oh my gosh, how much interest is going to add on for this young kid? 55 years old, this kid getting a reverse mortgage. So I have to start out with a lower loan amount again because they're going to have the ability to skip payments for 25 years. So you can see how age and interest rates can have a really big effect on how much I'm going to lend. Now, let's say I got this older cat, right? And let's say he's 100 years old. I'm like, buddy, your life expectancy is 102. You're only going to possibly miss maybe 24 payments. Your balance is just not going to go up that much. And I'm comfortable giving a very big loan amount because I just know that the probability of that house going upside down in those 2 years is very low. So there's the tale of two borrowers. Older, more money. Younger, less money. And the tale of interest rates. Higher interest rates, less money. Lower interest rates, more money. What's the perfect formula to get a reverse mortgage? I will tell you. It's to be 93 years old and have super low interest rates is where you're going to get the maximum loan amount. All right, back to our story. So a client calls up. They're like, hey, Ryan, I am 70 years old. My house is worth $1,000,000. How much can I get on a reverse mortgage? Okay, this is how I figure that out. We literally have charts, like old school charts in our industry. And depending on what the interest rates are, I know what chart to go to. So let's say interest rates are 6.5%. I go to the 6.5% chart. I find the age, 70 years old, on the 6.5% chart. Guess what? I can loan you 40% of the value of your house. And they're like, okay, my house worth $1,000,000. You can only loan me 400,000. That's not a whole bunch. I'm like, that's because rates are higher. And guess what? You might think so, but you're not that old. And they're like, oh. And I'm like, so if you owe 450 on your house, you might have 550,000 in equity in that $1,000,000 house, but I'm only getting you 400. I can't pay off your 450 loan. And they're like, dude, what are my options? I was like, if you're talking reverse guy, you probably don't have a lot of options, right? I'm nobody's fool. You probably called all the normal loan channels. You might even call one of those the home equity investment, no payment second mortgages. Some people are doing those, but I think they don't like those because I think I read the rates are pretty high in those. But again, that's an equity play. Like if you don't have equity, those don't work. So it comes down to me telling them, look, I know you have a lot of equity. The industry is just not built right now to give out a lot of money. So here's what you can do. We can get you downsized to a lower price home because you're basically taking that 550 in equity when you sell the house. It's going with you to a lower priced home. So that means that you don't need as much money in that lower priced home in equity, right? Your down payment is going to be less than what it was that you got in equity from the sale of your previous home. I have a slide on this, don't worry. So I start talking to him about selling with reverse mortgage, okay? Selling and then buying with reverse mortgage. Let's keep on going down the road of refinancing. Let's say they say, hey, Ryan, I happen to only owe 300 on my house and you can give me a loan of 400. I'm like, yeah. They say, that's great. Pay off my $300,000 mortgage. So now I have your reverse mortgage in place. I know I'm going to get a statement every month. The statement's going to show how much I owe. Hey, cool. You're right. It's going to show what the interest cost is for the 300 I borrowed. And if I decide not to make a payment, my balance will go up because you'll add the interest on. No, hey, you're pretty good. You know about loans already. Right? What about that other $100,000? I say, well, you can take it now. You can say, I don't want it right now. Put it on a line of credit, almost like having a home equity line of credit. Here's the difference. That when you're using a government insured reverse mortgage, that $100,000, guess what? It's a guaranteed line of credit. It can never go away because of interest rates changing, home prices crashing, things happening that would make a normal HELOC freeze. This one won't freeze. So you're good on the government insured reverse mortgage, right? So that's what you can do with a reverse mortgage. Tell me how old you are. I'm going to tell you, according to interest rates and the value of your house, how much I can lend you. If you happen to owe less than what I can lend you, you're in business. If you get the loan, I will just put a mortgage on your title. It doesn't say how much you owe me on the title, by the way. It just says you have a loan. And so that way I can get paid back. So now you have a reverse mortgage. I've loaned you 300. That extra 100,000, maybe you haven't used yet. So it's just going to sit available. Your statement will say you've borrowed 300. The interest for the month, I'll just say, is $2,500. If you don't send in $2,500 like you would have on a regular loan, we don't care. We'll add the 2,500 to the 300,000 you already owe, and now next month you owe us 302,500. This is the whole deal with the loan. It's really just a series of statements to me showing how much you owe, how much you have available, and what the interest cost is for the month. Okay, and you can decide to take that money off the line of credit whenever you want. It doesn't matter to us what you want to do with that money. We just know it's going to sit there. You're not charged for it until you use it. And there you go. So that is a basic refinance reverse mortgage. But there's something extra here, And like I said, when I'm sitting down with clients nowadays, I'm really leaning on the fact, I'm like, look, you might be able to get a reverse mortgage, but if you're not getting a lot of money out, that worries me nowadays. Because back years ago, we could refinance reverse mortgages really easy. You could get more money out. You were older. The house was worth more. People were able to refinance a lot more. You really can't refinance a reverse mortgage right now because rates are higher and property values, the froth has come off the top a little bit from what I see. So when I see people getting reverse mortgages and they might not be getting a lot of money, sometimes I let them know, like, maybe you should think about selling and buying another home. Because I know you're getting rid of your mortgage payment, but does that really set you up for the rest of your life? Or is this just a Band-Aid for a few years? I would prefer a client that's not getting any cash out to sell their house and go buy a lower priced home, like the example I'm about to go through, and create liquidity. That's what I think is so important in retirement, is having a stash of money to handle all these events that happen that, as I guess as people, as humans, I think we're pretty optimistic. Most of the clients I talk to are like, yeah, Ryan, no, everything's going to be fine. And I'm like, you're great. You're terribly optimistic. But I just looked at your house and I got to tell you, I think you're going to need some work on this thing soon. Just let's try to prepare for the future better. Let's see what that happens if a 75-year-old who has a house that's worth $1,050,000 says, you know what, Ryan, I do want more money in the bank. Maybe you can do reverse and get rid of my mortgage payment, but I can only do that. I can't get any cash out because I have a certain size loan you have to pay off. That's all right. Good. I love this. Okay. 75-year-old, you're going to sell your house. Your realtor sells your house for $1,050,000. You had to pay off your old mortgage, right? You owed probably about $450,000 on that thing, right? And so when you sold your house on and whatever kind of mortgage you had, and the realtor, you guys got paid for doing your job, and you have 560 cash now. You're like, okay, Ryan, how are we going to make this 560 work for the rest of my life? Okay, number one, obviously you're not going to buy a house for cash because you don't want to put all that cash back into a house. You're going to want to find something that is to your liking. You know what I love about San Diego, by the way? Dude, you could buy a nice house right there in Temecula, French Valley, Winchester, Hemet, Paris, all those places, new communities for $600,000. You're getting a super nice house. I think the San Diego to that transition is one of the easiest transitions I see for people. I have a lot of clients that do move from LA to buy in those areas, clients move from Orange County to buy in those areas. But with like North San Diego County, I'm like, dude, you're just driving up the freeway and you're making a huge difference in your life. Let's continue going down this road. You find a house you like for $600,000. I say, guess what? Based on interest rates, your age, and the purchase price of the home, those are the three things. I'm going to let you put down 320 and I'm going to lend you 280. Okay? So you're putting down 320. Well, you had 560 from the sale of your previous home, which means that you still have 240,000 left in the bank. I've given you a reverse purchase loan, which means it's now a reverse mortgage home. If you want to skip payments, you can do whatever you want. So for quite a few people, when they are able to get rid of a mortgage payment, they only need a little extra money here for emergencies here or there. And that 240 covers it really well. Okay. So this is just a great turnaround. I love these scenarios when they happen this way because I'm doing a really good deal. I'm doing a good thing for a client here, and so are you all. We're taking them and giving them longevity. We're giving them liquidity. We're putting them hopefully in a new house, or maybe their house is older and it needed work. Okay, yes, maybe the HOA is a little higher in this house. I know there's some things that are moving to the newer communities that aren't quite as exciting. They can transfer their tax base. So we've really done a great job here of setting them up for so much more. And by the way, remember, they got a 560 FICO, whatever, they got a bad FICO score, or they only got Social Security income. Okay, we're going to figure out how to try to get this loan done. Now, a disclaimer, not every single person gets approved. Sometimes there's some really hard luck cases. But I get a lot of people these loans that didn't think they could ever get a regular loan again. And remember, just because your FICO score is messed up doesn't mean it changes your interest rate, right? Just because you're something, everybody gets the same interest rate. Everybody can look at the same loan. And so the FICO score is just something we have to deal with. If they're really bad, the underwriter is going to ask me, Ryan, why do they have a bad FICO score? And I'm going to look to get a valid reason why. Something happened. They got sick. Their car had a flat tire. They couldn't afford it. That put them back a month on their mortgage. Their kids needed money. They had a hospital expense. Their dog was sick. They had to go to the vet. That was $500. Water heater. Like, I got a list. Believe me, I got a long list that will work to satisfy an underwriter when FICO scores are bad. Okay. At the end of the day, we're keeping people mobile. We're keeping something. I think that's very sacred for us, as the dream here is to always be a homeowner, but not have to be a homeowner being stressed out about, I got a mortgage payment and I got upkeep and I got all kinds of things happening. I don't think that's a great way to be a homeowner. So anyways, like I said, I just don't think there's any better place to do it than San Diego and moving 30 minutes up the freeway. It just kind of blows my mind that there's a price difference there, even from Orange County to those communities, right? Orange County, like San Diego, right? Every house here is worth 1.2 million, and then I can go buy a brand new house for 600. I'm like, I can't get there soon enough. I think you guys probably know that already. Okay, all right. So, any questions on that reverse purchase? You got to let me know, folks. Oh, hey, John, thanks. Is there a maximum loan amount? Theoretically, okay, I got to answer that question in two parts, John. Um, on the government insured reverse mortgage, yeah, as soon as you hit about 94 years old, um, what you're going to find is that once you're older than that, you're not going to get a bigger loan amount. Okay. And um, I will give you just, by the way, our calculator app, it might be live. It's going to be live in the store maybe Friday. I'll send you an email. But what our new calculator app does for you, if you got the old one, it still works, is it allows you to calculate this stuff right away. And it's great because I make sure we adjust it every Tuesday to be accurate. Okay, but I'm gonna give you this maximum loan amount, John, on an FHA loan. Okay, so that way, or max percentage. Okay, because yeah, you asked for it, so here we go. Um, and while I'm doing this, I will tell you there's a non-FHA loan. It's called a proprietary. Okay, and when we have a non-FHA loan, you can get a bigger loan amount. Sorry if I'm looking down. I'm running my calculator app right now. Okay. Um, FHA loans, we use a maximum value that FHA says we can use, and it's a little over 1.2 million. So as soon as we get to the 94-year-old and we have the maximum value, which is about 1.24 million, we're going to end up with the maximum government loan amount. That's pretty big, actually. About 844. That's sizable on a government insured reverse mortgage. That's great. Um, but the non-government loan, let's talk about that. There's no cap on value. So if you have a house that's worth 10 million and I say I can loan you 40% of that, you're going to get 4 million bucks on a reverse mortgage. So with that being said, John, on the non-FHA loan, I haven't run into a maximum loan amount yet. On the FHA loan, I just gave it to you. If you're 94 years old and your house is worth 1.249 million, you can get 844,000. All right. Hey, great question, by the way, John. Thanks. Appreciate it. Okay. Um, okay. No other questions right now. No other questions on the reverse purchase, y'all. I think it's great. And I'm doing a lot of them right now. Why? Because I'm just not getting sometimes, and a lot of times I'm not getting a loan amount big enough to help people out stay in their home. And I'm being very convincing and building a case going, you got to move. You need liquidity in retirement. Let's not fool ourselves into thinking that barely making it by every month is going to end well when things go wrong. If you got no financial backing, if you don't have kids that are going to help you when these things happen. Okay, so I'm a big proponent of getting right sized, of getting to the point where you can weather storms. All right. Okay, no other questions right now. So let's keep rolling, everybody. I'm going to go through this and we'll go through a little marketing. Okay, so what happens when you pass away and you got a reverse mortgage on your house? Hey, if there's equity in the house, it's like a regular loan, guys. Remember, reverse mortgage is so much like a traditional loan, other than the optional payment feature. Almost everything is the same. You pass away with a reverse mortgage. Hey, kids, your parents passed away. You inherited the house because you're the trustee and the beneficiary of the trust. What do you want to do? Kid says, "Well, let's keep it the house." Okay, it's your house. You already kept it, but you got to get your own loan. You can't keep your parents' loan on that house. So that's it. You're refinancing to pay us off. Hey, kid, you just parents passed away. You inherited the house, and I guess you don't want to keep it. So are you selling it? Yes, I'm going to put it on the market. Great. Let us know. We're going to give you a payoff demand. Pretty much that simple. Um, Kids got to get a hold of us within the first 30 days of when we send a letter that we notify them that we know their parents passed away or the last parent passed away. If you don't get a hold of us in 30 days, we'll put you in default. If you get a hold of us in 30 days, we're going to say, hey, we're going to give you 6 months right out of the gate to refinance or sell. If you can't get it done in 6 months, you can get another 6 months. But you got to show us that you're doing something right. And we will put the house in default even after that 6 month mark because we kind of want you to be like, hey, can you move it along? We want to get paid back. You're not making a payment during that time. The reverse mortgage is still working. But we do want clients to try to get this done sooner than later. But you could get 12 months to make that happen. I don't talk about this one too much anymore because not a lot of upside down homes out there. Even with reverse mortgages, I really don't run into houses that are upside down. If we ever got to a point where, hey, the market started to turn, someone had a reverse mortgage, the house upside down, if you have the government insured reverse mortgage, The symbol for that is HECM. It's an abbreviation for home equity conversion mortgage. That's when it's an FHA reverse. If the house is upside down on that FHA reverse mortgage, FHA is going to pay the upside down portion for the kid. So the kids can inherit the house with no upside down loan. That's pretty cool. Let's say their parents owed 750 and the house is worth 700. FHA is going to pay the loan down to 665. That's pretty cool. A kid does not have to worry about inheriting an upside down home when there's a government insured reverse mortgage on there. Okay. So I think that's kind of cool. But again, I haven't even run across an upside down reverse mortgage home in years. So I don't know. Maybe it'll return one day. But if it does, and it's the government style loan, you're in business, kids. Otherwise, kids, yeah, you're going to inherit the house. Kids, you can be on title with you want with your parents. We're okay with that. You can have the trust own the home. We prefer that. If you have a will on file with us, we'll still speak to you. Obviously, a will doesn't avoid probate. But basically, when your parents pass away, in order for us to communicate with you, you have to be one of those three things. You have to be the executor of the will, you got to be the successor trustee of the trust, or you have to be on title prior to them getting the loan. That's important. You just can't pop yourself on title before mom passes away and then call us and expect us to be like, oh, yeah, we see you're the owner of the house. We're going to be like, hey, where did you come from and who are you and how did you get on title? We're going to be like, this is questionable. And it's not that we can stop you from inheriting the house or owning the house if you did a quick claim. But what we'll do is we'll withhold the payoff demand. So all of a sudden we're being a thorn in someone's side because we don't want to get sued. Like, what if the brother quit claimed himself on the house? The sister didn't know about it. The brother's trying to corner this thing. We start talking to the brother, giving him all the information, helping him. And then the sister comes and says, he was totally fraudulent what he did. We're suing you now. We're like, holy smokes. So we're kind of picky. If your estate planning is putting your kids on title, so be it. But do it do it either when you're doing the loan, so we got record of it, or let us know that's happening. Same thing with the trust. Don't just willy-nilly throw your house in a trust after you've done a reverse. Let us know, send us a trust. That way we have the right stuff on file. Same thing with the will. If we don't have your will on file, and that's your method of estate planning, which is terrible, but at least get us a darn will so we'll talk to you and we won't shut you out, because we will shut out heirs that have no have no way to speak to us because they don't have the right paperwork on file, and that's no fun. Okay, let's keep on trucking, y'all. Our app will be out. Like I said, our app is done. I believe it's in the App Store. I just don't think you can get to it for another 24 hours. We'll send an email when you can. Why is the app important? Because the app's going to tell you the right loan amounts. And the chart, remember, the interest rates change weekly. Sometimes the charts change, so you can't memorize this stuff. I update the app every Tuesday to make sure that it's accurate for you all or close to being accurate. And basically, at the end of the day, it will help you with all of these questions. Well, what if a spouse is 62 and the other spouse is not? Will it work? The calculator app will help you with that. What if it's a non-FHA loan, Ryan? Can both people be under 62? Sure. Ryan, what if I have an FHA insured reverse and one of them, again, is 62, the other is younger than 62, but they're married? Okay, well, you can both be on the loan. We're going to base the calculation on the younger spouse. So all those questions can be answered with the app. But yeah, we got people of all kinds of different ages getting reverse mortgages. Remember, nowadays with the non-FHA reverse mortgage, we can do a loan for a kid at 55 years old that wants a reverse mortgage. Go ahead, kid, and do it. You're not going to get a huge loan amount because you're so young, but you can get it. Okay. And how about, but for government insured reverse mortgage, we need at least one person 62. Okay. And then as soon as a house is worth about 1.3 million or more, we're probably going to look at the non-FHA reverse mortgage because it'll get you more money. To be frank, non-FHA reverse mortgages are actually getting more money than FHA loans are right now anyways. Here's why we don't use them all the time. Because non-FHA reverse mortgages have higher interest rates. They're not insured by the government. So all these investors that we use the reverse mortgages from non-FHA sources are going to charge higher interest rates. One, because they can. Two, because they don't have any insurance backing them up. So they got to make more money. And they want to make money. FHA insured reverse mortgages are lower priced. You have mortgage insurance on them. When I say lower price, lower rates. 6% probably, pretty good rate. Non-FHA reverse mortgages anywhere between 7.9 to 9.8, something like that. Okay. So there you go. And some people gasp, by the way, when I do these classes live in person. And some people are like, oh my gosh, a 9.5% reverse mortgage, who would do that? And I'm like, believe it or not, a lot of people with expensive homes. Um, a lot of people want to stay in their homes the rest of their lives and they need liquidity. So they kind of flip a switch and they're like, am I going to be worried about a higher rate and therefore not getting cash out of my house because I'm worried about a high rate loan? Or am I going to just take the high rate loan and not care and get a bunch of cash out and enjoy, have liquidity? So people are taking out $2-3 million reverse mortgages at 8-9.5% because they want liquidity. I mean, I say to them sometimes, you think about selling first, maybe, you know. But there's the story of reverse mortgages. And and I believe the thought process is correct. Maybe I wouldn't be excited about a really high rate loan, but I believe the thought process of creating emergency funds and liquidity starts to be more important than the fact that saying, "Hey, I got a 6% reverse mortgage. It's a great rate." It's like, well, what does that do for you? It helps your kids out because they're going to inherit a house with a lower balance, but it really hasn't done anything for you necessarily if you plan on staying in that house the rest of your life. All right, moving on, folks. Moving on. So let's do a quick thing here. So we know that older homeowners are selling their house. So I always start at the top, right? I guess, is that the top of my pyramid or the bottom of my pyramid? I don't know. But that's the most important thing when I think about how am I going to find somebody that needs to sell their house or get a loan. Older homeowners in retirement tend to need that cash. They're not working anymore. Older homeowners are the number one people selling homes. So if I'm going to do any marketing or try to find a listing, I'm not a realtor per se, but if I'm going to try to find somebody who needs to do something, I'm going to start with the older people and then I'll start to work my way down. And there's lots of ways to try to find these people. Let's talk about, I'm going to give you 3 logins, one for our website, one for something called Title Pro, and one for Title Toolbox. Okay, these are all softwares I use to try to sniff out who might need to sell their home. And I'll try to get online here and do an example. I do a 2-part class. You're welcome to find the 2-part class I do where I spend a whole class on marketing. So you can always find that class, but I'm trying to break it off here in 10 minutes. So 2 things. Number 1, I'm going to share a website I'll give you logins for. Why do you care about this website? Because I got just free resources on here for you. And to be frank, at the end of the day, um, it takes time to like think of things and create things, even if you could have, Chatbot or Claude do it right away. Sometimes it's just nice when it's already done for you. So I've made some materials and I have some videos about what I'm doing here today on my website as well. So in case you forget or you're not paying attention, you can use my website. So you're going to get logins for this thing. Um, Over here are some tutorials and videos, a lot of them. Even on what I'm going to show you in a minute, which is like how to use Title Pro to find people that need to sell homes that are in for older homeowners that have reverse mortgages that are behind on their taxes. That's an interesting one. We can do a search to find affidavit of deaths. So people that have reverse mortgage and an affidavit of death filed, that's an interesting one. It's sad, but that's a lead because that house is probably going to need to be sold. So I do all kinds of searches with these softwares and just have some fun. And the videos on how to do it are right here on my website. The other thing I have here is I have marketing materials because sometimes I'll do a search through these websites, and then I'll want to have something to give to a client. So stuff that I give to clients, I put on this website, and you can just use it for free. You can actually put your name on it. Okay. So like I'll use this what happens to real estate after the loss of a loved one. That's if I'm going to do a search for an affidavit of death on a reverse mortgage home, I'll want that flyer ready. Um, Something that I do to try to get older homeowners that are having cash flow issues, i.e., might need to sell their home or get a reverse mortgage. Um, Insurance agents are very busy right now. I know because I'm one of the people making them busy. Because almost I would say a really high percentage, about 80% of the people I'm doing reverse mortgages for, their insurance is messed up. They can't afford their premium anymore. They've lapsed coverage. They have to get a fair plan. Insurance companies are getting even tougher in writing policies. So insurance agents are one of the first people to know when an older homeowner is having a cash flow issue. And so I go to these insurance agents, specifically the ones I use quite a bit, and I say, "Where's my referral at?" And they're like, "What do you mean?" I was like, "Well, first of all, I give you insurance policies, but besides the fact, I know you have older clients calling with lapse coverage and they're not able to get new coverage. That could be a potential loan or a sale. I need you to just see if those people are willing to talk to us to see how we can help them. You want my homeowners insurance business, buddy. I want your turn downs on homeowners insurance with older people to see if that's a lead. So you can use a flyer I made. It's right here. It tells insurance agents, give me a call. Don't let a turn down or elapsed coverage go. Get it to me so I can help these people. I do that kind of stuff with like plumbers as well. Like here's my plumber flyer you could use. Um, I have one for roofers. I have one. It's not on the website. I have one for pool people. Why? Hey, guess what? Pool guys are one of the first people to get fired from an older homeowner or have their money problems. They're not keeping up with their pool. And a pool person knows this. Sometimes a pool person is the first person to know someone's in cash flow issues, right? Who would imagine? But I want those pool people to let me know someone's canceled or is not taking care of their pool because I want them to say, hey, Mr. or Mrs. So-and-so with the green pool. Obviously, maybe I could give your information to someone that can help you see if there's something you can do here, i.e. maybe sell the house or refinance the loan. So plumbers, guess what? Yeah, people don't fix stuff because they can't afford it. Roofers don't fix stuff because people can't afford it. Electricians don't fix stuff because they can't afford it. All of these people are on the front lines of figuring out when an older homeowner might be running into cash flow issues. And that's so early on in the process, way before they've talked to another realtor. And I want that lead. So, anyways, there's stuff on my website that you can use for that, and it's all available to you guys. All right, let's hop back over to something I'll give you logins for. And this is a great site called Title Toolbox. And let me get you over to that site. Let's see. Now, this is not a Fidelity company. It just happens that I end up through there through a link through Fidelity. Long story, but anyways, we'll get you your own logins for this, and this is a data site that's great. What does this site do? It'll tell me things about homeowners, like who has a reverse mortgage that's in default. Why is that important to know? Because that might mean the person's passed away and the kid's going to sell the house. It could tell me when there's an affidavit of death filed on a house with a reverse mortgage. I don't want to make it seem like I'm like trying to find older homeowners that have passed away, but it happens, and these houses are hitting the market. How about an older homeowner that has a tax default on a reverse mortgage home? Why are you not paying your taxes in your reverse mortgage? These things are all very important. You can just do it with a normal older homeowner. You could find all kinds of stuff on this website and another one that I call Title Pro. Title Pro I like because it actually has ages, demographics. Title Toolbox does not have the ages. Sometimes I use the two websites in conjunction with one another to find a good sales lead. But like here, let's just hop into Title Toolbox real quick. Like I said, you will get, we'll send you an email. This is why it's important you guys send us your emails if you guys want to get access to all this stuff. So what I want to do is I want to find, I'm going to do a search of people with reverse mortgage homes with affidavit of death. Very sad. But the reason why I'm doing this is a good chance this house is going to need to come to market and be sold pretty quickly. So I've logged in again. I got videos on this stuff. I want to search an area. Yeah, that's where I live. I'm not going to try to do a marketing campaign, huge one, because I'm just not going to get to it. I want people that are either by my office or by my house. So that way I don't have an excuse for not going and dropping a flyer, making a phone call to them. You can get phone numbers on this website. I drop flyers usually twice and then knock on a door. And I have lots of success with that. I have failures with that, but I do get into people's houses who have reverse mortgages that have problems. I get into people's houses that are older that just have tax defaults. So anyways, first thing I want to do is I want to find people that have reverse mortgages. By the way, here's something interesting. The average time and length of time a reverse mortgage is held is about 9 years. Why is that? Do people just pass away after 9 years of getting a reverse mortgage? No. But things are happening with our older homeowners. Guess what? The oldest demographic of homeowners are baby boomers. Okay. And those boomers are starting, right? They're getting into their mid early to mid 80s. And so a lot of them just can't stay in the house by themselves. There's nothing wrong with the reverse mortgage, but the kids or the family members are saying, hey, you can't stay here anymore. You're not doing too well. So I'm going to sell a house reverse mortgage, even though I am okay financially, but I can't just stay there by myself. Um, I'm also going to have to possibly sell a house reverse mortgage if I've used all the money that was available. And now I have a house with equity and I have no mortgage payment, but that's not enough. Folks, I'm going on a lot of appointments with people that have had reverse mortgages for 8, 9 years. And guess what? They're like, yeah, I could use some extra cash. I can't refinance this thing because there's no way to refinance it. And I'm like, look, you're in a $1.2 million reverse mortgage home. Maybe you owe 700,000 on it. Sell this thing now so you can go buy that $500,000 property and still put some money in the bank. You're basically refreshing your reverse mortgage on a lower priced home and grabbing some equity out of the home you sold along the way. So I went on 3 appointments last week for people with reverse mortgage homes that are probably going to sell because they just need to get more cash. And that was actually all three of them. All three of them are actually fine health wise, but they just want to get more cash and they know the refinance is not going to work. Is their house okay? Is their the loan okay? Sure, but their cash flow is not. Okay. Let's find some people who have passed away. So if you have an affidavit of death filed on a reverse mortgage home, you're gonna have about a year to sell that home. So kids are probably might be in the mix there. So I just did that circle. Guess what? This is a pretty good lead right here. Two leads actually. In that little circle, I found two affidavit of deaths filed on a reverse mortgage home. If those homes are by me, I'm gonna go on a drop a flyer, see who these people are. Guess what this just cost me? $1.46. Okay. Let's just say I go really wild and I'm like, Ryan, I don't want to drop flyers or do anything. My life is too busy for that, but I do want to know what's going on with these people. Okay, heck. I just spent $1.60 and I got two phone numbers. So again, um, this is very specific. I believe these homes are going to come to market fairly soon. I try not to be like just shotgun approach and blast the stuff. I don't want to waste my time doing that. I want to try to layer problems. Okay. So when I can layer problems that it looks like an homeowner has, I have a better shot of that problem becoming a loan, right? Or a listing for you guys. So anyways, I don't have a lot of time to do these searches on here. I did one for you. But I hope you can see that there's some cool stuff out there. By the way, there's no monthly subscription to these websites, Title Pro or Title Toolbox. They just want to get paid ultimately when you want that data. Dude, that was $2. Okay. I spent, I don't even know. I can't even get out of bed without spending $2 today. I think that's pretty cool. All right. And I got videos on that. I love to do that stuff. I love to go out there and try to turn some soil and to find something. And I hope you guys enjoy that too. I hope you guys have found the review of the reverse mortgage well. So that way you understand why people aren't getting reverse mortgages or why they are. Hopefully the refresher on how it works was good. Hopefully having a little fun with all this other data, all this stuff I happen to do because I enjoy it will be fun for you too. I'm certainly here to support your efforts to try to turn that into a lead. What I really want to do is turn a lead. Hey, if you guys know that only 35% of people that ask about reverse mortgages are going to turn into a reverse mortgage, you got to know a question about can I get a reverse mortgage could actually be a lead for you. Don't think it's a reverse mortgage lead. It's a loan, and you're not going to. It has nothing to do with you. It is certainly a homeowner that could be turning into a listing because I can only help 35% of them that ask me. Hopefully, you start to see average time, like the time reverse mortgage is held is 9 or 10 years. Just because someone is telling you have a reverse mortgage, that doesn't mean they might not need to sell their home soon. That's a lead. Okay, once we peel back the layers, it's not of the onion. This doesn't make you want to cry. This makes you want to be happy because maybe there's deals in there that you didn't think were a deal. And I'm happy to help you find them. So listen, y'all, you sat through here. You made it through an hour and 2 minutes. I certainly appreciate you staying on. I'm available to you any all times as a resource. I'm right here, even though I'm up in the city of Orange. I'm in San Diego. I'm in the desert. I'm in LA weekly. And I would be happy to, if you have a client that you have questions on, or you think you may have a lead, but you don't know how to turn it into something, give me a call. Let me see how we can turn it into something. watch your email. You're going to get logins from us probably in a few days. Hopefully, like in 3 or 4 days, you will get the link for our app that will help you calculate these loan amounts to a very good amount. All right. Any questions, you all? I think Johnny might have left already, but otherwise, thanks for being here, buddy. And to y'all, make sure we got your emails. Thanks so much for all of you joining us today. Please remember to thank all the beautiful people at the North San Diego County of Realtors that allow us to share this information. They've been letting us do this for years, and it is fantastic. And I think it's important for you all to stay up to speed on what's happening with older homeowners and their homes. Have a great day, everybody. Bye for now. You're welcome, Sam. You're welcome. Thank you for being here.